of the judiciary cannot be overemphasized as a part of the three organs of government. Their role as a guide and protector of the Constitution and interpreter of the law to the citizen make them more important than the other organs of government. Following the recent reforms of the banking financial services sectors in Nigeria, this workshop tends to keep the judiciary acquainted with the Banks and Other Financial Institutions Act of 2020. While addressing the gathering, the Governor of Central Bank of Nigeria, Godwin Emefiele, was represented by Deputy Governor, Financial System Stability, Aisha, Ahmad, emphasized the importance of the judiciary in upholding CBN's mandate and ensuring orderly operations of the financial system.
Particularly the focus on the Banks and Other Financial Institutions Act 2020. Recognize the fundamental role of the judiciary in upholding the CBN's mandate and ensuring the orderly operation of the financial system. Your role as custodians of the law, providing certainty of legal rights and speed of fair and impartial resolution of commercial disputes is crucial to building confidence in the banking and financial markets. The Nigerian banking industry is strong, stable, and resilient, and it continues to experience steady growth and innovation. Despite occasional shocks that we've seen over the last decade, it remains a veritable instrument for economic growth and development through granting credit facilities to key sectors of the economy, ensuring that it acts as a critical pass-through for monetary policy measures, and it promotes financial inclusion by maintaining world-class payment system. Banking reforms implemented over the past decade have ensured stability in the financial system and have enabled the sector to deliver on these critical functions. These policy reforms include strengthening governance and risk management practices, enhancing the regulatory framework with the objective of ensuring overall solvency and stability of the sector. We've also implemented reforms to enhance financial inclusion and develop the payment system through issuance of regulatory guidelines for new entrants and products into the Nigerian financial and payment system. These measures have incentivized substantial investment in the system and has led to significant growth in the value and volume of electronic transactions.
On the relevance of the Banks and Financial Act 2020, she added that the act was anticipated to revitalize the Nigerian banking industry by establishing a solid and stable financial system that will support the country's long-term growth and development. According to her, the BOFIA 2020 reinforced the anti-money laundering and counter-terrorism financing framework by requiring regulated businesses to adhere to the anti-money laundering and cybersecurity rules. She also mentioned that the BOFIA included measures for successful managing unclaimed cash or abandoned property in dormant accounts, specialized bank and other financial institution accounts, as well as recovery mechanism for failing banks.
The passage into law of the Banks and Other Institutions Act 2020 by the 9th National Assembly significantly improves the legal framework for the sector and is a strong complement to the earlier reforms that I have mentioned. The overarching objective for reenacting the BOFIA Act, which was first passed into law in 1991 with subsequent amendments, was to upscale the banking law to align with international best practices, taking due consideration of the significant financial, socio-economic, and technological transformations that have occurred over time. BOFIA 2020 is expected to reinvigorate the banking sector as it will engender a sound and stable financial system that will support sustainable growth and development, which is especially critical as we come out of the economic impacts of COVID-19. You would also agree, you may agree, that BOFIA 2020 is a landmark piece of legislation and a remarkable improvement over the repealed BOFIA 1991, given its robust and comprehensive provisions founded on international best practices. Some of these include expanding the powers of the bank to more readily regulate deposit money banks and other types of institutions, widening the powers to expand the supervisory parameter over other financial institutions, whether they are providing financial services virtually, digitally, electronically, or physically. The Act also strengthens the anti-money laundering and combating the financing of terrorism framework by mandating regulated entities to comply with AML-CFT and cybersecurity regulations. This, for us, is coming at a very auspicious time as the nation continues to advance in its adoption of digital economy, which has also seen the imminent launch, of Nigeria's central bank digital currency, the e-Naira. The Act expressly provides for the issuance of regulations on corporate governance. This will strengthen depositor and investor confidence in the system, prevent market abuse and insider dealing, and increase foreign direct investment into the financial sector and indeed the economy. We all recall the bank failures which hit the sector in 2009, which was largely caused by non-compliance with the principles of corporate governance. Now, BOFIA 2020 makes compliance a mandatory requirement as opposed to being a persuasive suggestion. The Act also contains elaborate provisions on the effective management of unclaimed funds or abandoned property in dormant accounts maintained with banks, specialized banks, and other financial institutions to ensure efficient administration of such accounts for the ultimate benefit of the owners of the funds. BOFIA enhances significantly the recovery and resolution tools for failing banks in order to prevent systemic crises and maintain financial system stability without undue burden on the taxpayer. Tools such as bail-ins, termination of rights, asset separation, and others will assist the ring-fencing of problem assets in the banking industry.
She further explained that the Special Tribunal for the Enforcement and Recovery of Legible Loans was established under the Act to expedite credit recovery, proceedings, and collateral rights enforcement. The CBN Deputy Governor, Financial System Stability, also said that supervisory observance indicated that recalcitrant debtors had exploited the non-prioritization of the credit recovery matters in the Nigerian judicial system to frustrate debt recovery efforts by financial institutions, adding that the Apex Bank is currently informally engaging key stakeholders in the judiciary to operationalize the provision.
The Special Tribunal for the Enforcement and Recovery of Eligible Loans, as introduced in the Act, will help accelerate credit recovery processes and enforcement of collateral rights. This, together with the bank's policy on the global standing instruction, will help address the incidence of non-performing loans that has posed a great threat to the Nigerian financial system. So undeniably, this new legislation is an answer to the clarion call of both the public and private sectors for financial sector legal reform, as well as that of international and governmental organizations for compliance with best practice. Clearly and undoubtedly, the judicial branch is critical to the full operationalization and implementation of BOFIA. Hence the convention of this very important workshop to engage on critical aspects of the Act.
The theme of the workshop, which is the role of judiciary in financial stability in Nigeria, the Chief Justice of Nigeria, Ibrahim Tanko Muhammad, says is apt and will keep the judiciary abreast and other specialized area of banking law. He added that the effective judicial system is imperative for financial stability, which will result to economic growth, stressing that judiciary plays a major role in the enhancement of financial stability of any country.
Recent reforms of banking and financial services law and practice. In line with the esteemed tradition of promoting scholarship and excellence among judicial officers in Nigeria, this workshop is organized by the NJI in collaboration with Juris Law and the Central Bank of Nigeria. The theme of this year's workshop is the role of the judiciary in financial stability in Nigeria is opposite, as it will sensitize and keep judicial officers abreast with new developments and this specialized area of banking law. More so, does not gainsay the fact that an effective judicial system is a catalyst for financial system stability, which will in turn dovetail into economic growth. Thus, the judiciary is a crucial stakeholder and a necessary partner in the enhancement of financial stability of any country. This further strengthens the perception that the role of the judiciary in financial stability of any country, and indeed ours, cannot be overemphasized, as it is a sine qua non to economic stability and development. My lords, distinguished participants, one of the key factors that will aid the judiciary in carrying out its assigned responsibilities and essentially ensuring financial system stability is on the need for judicial officers to embrace case management in their courts and thereby aid speedy dispensation of cases in their dockets. While it is almost impossible to avoid disputes in commercial ventures, experience has shown that investors are more concerned about dispute resolution mechanism put in a place to quickly resolve disputes that may arise in the course of business transactions between disputants. The common balance has always been that time is money. This, to a large extent, is apt. Reason being that quick turnover is the ingredient of any successful business. Thus, No investor will be happy to tie down his capital for an uncertain period of time, which may have been occasioned by commercial disputes bogged down in court. It's a well-known fact that court-related litigation in Nigeria is characterized by 3 or at 4 stages, commencing from the trial court, then to appellate court, and finally to the Supreme Court. The journey to the Supreme Court in a commercial dispute could last for as long as 8 to 20 years. If the judiciary must play its role in financial stability in Nigeria, cases of delay must be aggressively and frontally addressed so that parties will get justice at the end, and the resultant effect of this will raise public confidence in the judiciary. It suffices, therefore, to say at this point that timely dispensation of justice by the judiciary is a critical factor that will enhance financial stability in Nigeria.
In his remarks, the former Chief Justice of Nigeria and a one-time chairman, Board of Governors of the National Judicial Institute, Ahmad, emphasized that laws are constantly being enacted by legislators in response to the urgent socio-economic needs of the country. Hence, a workshop like this is essential to improve the professionalism of judges and enhance quality performances.
Globally, the judiciary is constantly developing to meet the need for efficient dispensation of justice, and this makes it necessary for judicial officers to constantly update and upgrade their knowledge through conferences, seminars, and workshops, especially in specialized fields such as banking and petroleum law. Laws are constantly being enacted by the legislature in response to, among others, the socio-economic needs of the country. Judicial training is therefore essential to improve the professional competence of judges and enhance the quality of justice delivery and performance of our courts. This is because there cannot be judicial reform without deepening judicial education, and the objectives of judicial education includes instilling professionalism, increasing the competency, efficiency, and effectiveness of judicial officers. Judicial officers need to keep abreast of recent developments in the law, as certain judicial decisions have direct effect on investors' confidence and decisions to invest in the economy. Investors want to be sure that laws will be implemented as they are, and that cases will be determined speedily. I want to commend the Governor of the Central Bank of Nigeria for his awareness of the need to judicial education, hence the Central Bank of Nigeria's sponsorship of this workshop. It is without doubt that banking and petroleum sectors are two areas that are vital to Nigerian economy. Both sectors have recently witnessed major enactments, that is, Banks and Other Financial Institutions Act 2020 and the Petroleum Industry Act, PIA, 2021. These two acts aim to raise the practices in both sectors to global standards, and the Central Bank of Nigeria played an active role in advocating for their passage. Central Bank of Nigeria has a mandate to, among others, maintain and manage the country's external reserve, to safeguard the international value of the naira and maintain confidence in the country's monetary exchange rate policies. Net foreign assets of the banking system was 7,224.90 billion naira as at the end of January 2021, while bank deposits are reported to have risen by 6.95 trillion naira between February 2019 and February 2020. This is therefore a huge and sensitive industry requiring strict regulation. The bank and financial regulations, the Bank and Financial Institutions Act 2020 seeks to achieve this, and there is no doubt that if properly implemented, the Nigerian banking system will become one of the most resilient, stable globally. The Banks and Other Financial Institutions Act 2020 repealed the Banks and Other Financial Institutions Act 2020, the laws of the Federation of Nigeria 2004. The Act, which came into effect on 12 November 2020, has 132 sections and divided into 5 chapters and 10 parts. Chapters cover banks, specialized banks and other financial institutions, general regulatory powers, resolution, fund, and special tribunal for the enforcement and recovery of eligible loans. This workshop aims to keep my lords abreast of the Bank and Other Financial Institutions Act 2020 in fuller details, which will enable my lords to contribute more to the development of banking sector and the economy at large.
The theme of this workshop is particularly crucial at this time, considering the effects of COVID-19 pandemic on the economy of the country. The workshop will consider the important provisions of the Act under different topics. The budget 2020 was accepted to by President Ahmad on the 12th of November 2020, repealing the Banks and Other Financial Institutions Act 1991 as amended and introducing important provisions which sought to deepen the regulation and improve the efficiency of the country's banking and financial sector. The Act also expanded and improved the Cbn's regulatory oversight and discretionary powers over the sector. Major legislations in the banking and financial sector were updated, resulting in the creation of participants exploiting loopholes to perpetrate abuses and other economic companies. The banking industry crisis of 2002 and 2008 and their impact on the economy are still not forgotten. These and other factors led to the enactment of the BOPIA as championed by the Central Bank of Nigeria and supported by the key actors in the sector. The Act deals with licensing and operation of banks by the Cbn, the duties of banks, books and records of accounts of banks, rescue tools for failing banks, supplemental provisions, and miscellaneous matters in respect of banks. The government will transfer the bank, or only part of the banking business of the failing bank, to third-party private purchasers or employ any other intervention tool as the Cbn Weekly. The Cbn can also acquire the shares to ensure its control of the bank. The Cbn will also revoke the license of the bank. The consent of the Central Bank of Nigeria government is needed for any change in control, transfer of significant shareholding, sale, disposal, or transfer amalgamation or merger, restructuring, reorganization, or reconstruction of banks in Nigeria. The Act further regulates specialized banks and other financial institutions. The Act recognizes fintechs and microfinance banks, which are a fast-growing sector of the banking and finance industry that fall under the legal power of the Central Bank of Nigeria. The Act requires fintechs and microfinance banks to be registered. The acquisition of Paystack, which is a Nigerian fintech company, by Stripe, an American fintech giant of over $76.6 billion, shows the great potential and importance of this sector to the Nigerian economy. Its regulation, amongst others, is of course a work of development. The Act gives the Central Bank of Nigeria general regulatory power over banks, the power to make regulations and guidelines the respect of public governance accounts and other financial institutions in Nigeria.
Emmanuel Hadu reporting for Moneyline with Nancy.